So you've seen companies that are, and there's many, many other examples, companies that are both executing on a core marketplace strategy, but deeply embedding a financial services component. And, while that on the surface may appear somewhat kind of incremental, often the result is a breakthrough consumer experience.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Pete Flint is a serial entrepreneur. He built one of today's largest marketplaces, Trulia. Trulia was eventually bought by Zillow in 2014. And nowadays, Pete spends his time investing in next-generation marketplaces as a general partner at early-stage venture capital firm NFX. His firm has invested in companies like Lyft, Patreon, DoorDash, and AngelList. Pete published a presentation last week on a topic that I thought was very interesting for this podcast, the rise of fintech-enabled marketplaces. I'll let Pete explain the trend, but as some of today's hottest companies evolve, it's their new financial services offerings that can create tremendous value. Pete Flint is my guest today on the Tearsheet Podcast.
Hi, my name is Pete Flint, and I am a general partner at NFX. We're an early stage venture capital firm headquartered in San Francisco and also offices in Tel Aviv.
Amazing. And I know that you guys have had a specific thesis around marketplaces. Can you kind of talk about that focus?
Yeah, so sure. So I guess just to give you some context on NFX. So we're an early stage fund. The name NFX is really short for network effects. And I guess our entire thesis is driven by investing in network effects. There's platforms, there's marketplaces, they're kind of B2B services, and really that's driven by our entrepreneurial background. So, the three partners, we've collectively founded 10 companies with exits of $10 billion, many of which have been marketplaces. And so we've just kind of had this passion for this space. And so, we've been studying and operating and investing in marketplaces for, over 20 years. And that's been just a core focus for the fund. And I think it's, I think everyone, and particularly in 2019, you look at kind of this raft of IPOs that are coming out, whether it's Uber, it's Lyft, it's Airbnb, a B2B, a B2C marketplaces. And then you've really got these kind of B2B network effect platforms such as Slack and Zoom, which are also kind of massive network effect businesses. So we're really, I guess the sort of thesis for us is to find the next generation of those companies which have this core network effect that can create tremendous value for the participants, and also, the core notion is they're highly defensible. So that's been the process. And I think this is, out of our research, we've been tracking the evolution of marketplaces, how they evolve from kind of really simple kind of lead gen type businesses online into kind of what we think is the next set of really exciting billion-dollar marketplaces, which we're calling Fintech-enabled marketplaces.
So can you describe to us what a fintech-enabled marketplace is?
Yeah, maybe just give you a sort of 30 seconds on the evolution. So we've seen, as you think about kind of marketplaces, it's been an incredibly dynamic category. So you've seen how in many industries, you've seen kind of industries start from this sort of horizontal lead generation platform. So you think of, almost like a Craigslist back in the day, to some extent, eBay. eBay added in a sort of horizontal transactional component, similarly to Amazon as well. And then over the years, you've got really there's been a sort of a unwavering and relentless path that really in two directions. One of those directions is increasing the user experience. So you've seen companies that have, if you take hospitality, then, 15 years ago in the US, you would find vacation rentals through Craigslist. And yet today, with really like a few clicks of a button, you can book a vacation rental in the most remote part of the world through Airbnb, and get instant confirmation and payment and escrow in an instant. And that's been a kind of very consistent journey in terms of companies innovating on the user experience. And that generally sort of manifests itself in either deep verticalization, solving that specific problem extremely well, or deep, deep sort of platform innovation. So typically that's manifests itself in mobilization. So companies are being specifically driven for mobile. So think of Uber, that really broke through user experience by creating a mobile-centric experience. The other axis which companies have this sort of relentless motivation to enter is capturing more of the transaction. So, the sort of anarchistic Craigslist really didn't monetize at all except for one or two verticals. And you've seen companies that as they achieve a kind of market dominant position, and as they look to build sort of big businesses, increasingly smaller niches, they're capturing more of the transaction. So, again, in the hospitality space, Airbnb takes a commission on those transactions. And now you're seeing kind of an evolution of companies which are actually providing kind of full stack and full control over the experience, such as Lyric and Zeus and others, which are kind of really taking, they're taking the entire rent, the rent or the hotel store and capturing much more of the economics rather than just a lead gen fee that Airbnb is providing. So you've got this kind of relentless path. And, what we're seeing increasingly is that companies are evolving not just in managing the transaction, but really getting into kind of providing innovative financial services on top of that transaction. So that manifests itself in the case of some companies, in the case of insurance products, which is a core financial services product, and integrating insurance product into their platform, and that has various benefits to the marketplace. Or they're providing services such as they're purchasing supply to provide liquidity in the case of Open Door. So you've seen companies that are, and there's many, many other examples, companies that are both executing on a core marketplace strategy, but deeply embedding a financial services component. And, while that on the surface may appear somewhat kind of incremental, often the result is a breakthrough consumer experience. So you're able to enter the market with this breakthrough consumer experience. And also you're able to capture more of the economics of the transaction, which we think the biggest opportunities in marketplaces to uncover often have this component of capturing more of the transaction and dramatically better user experience.
So it's definitely a theme that you described it much more eloquently than we have on Tearsheet. But one of the themes that we've been covering is sort of this topic of finance everywhere and banking as a service companies that are enabling sort of, the chopping up of a bank and being able to deliver those like sort of, surgical services into other things. What's kind of, what are the catalysts here? I know you described a couple of them like in the course of your thing, but what's really driving this? Is it are customers looking for this, or is it just the marketplace that are deciding, hey, this is sort of the way we tie all of the services that we offer together?
Well, I think there's different catalysts, both from the sort of the company side, and there's also catalysts from the consumer side. I think from the consumer side, the catalysts are that consumers demand a really high quality service with a frictionless experience. And you take a lot of these sort of perhaps large industries, whether that's housing, that's automotive, that's travel, they often involve kind of multi-party transactions, often with misaligned incentives. And so consumers, they have this experience which they've learned from Uber and Airbnb and others, which is like, I demand to have this really seamless experience very fast, and they're actually prepared to pay a premium for that. I spent some time, previous to NFX, I was the founder of Trulia, and then sat on the Zillow board for a while, and watching Open Door as they sort of grew from a startup into a bigger company, and the consumer research, but ultimately led to Zillow providing launching Zillow Offers, really shone a light on this. Was surprising to everyone that there was a very large portion of consumers that are prepared to pay a pretty sizable fee for the convenience and confidence of transaction. And you see this in countless industries, whether that's automotive, whether that's travel, obviously transportation. People are prepared to pay a premium fee for a premium service in substantial parts of the US. So that's kind of the core consumer demand. On the business side, there's a number of kind of enabling catalysts which kind of make this possible today. The first is that this sort of feels like a sort of almost a natural evolution. So the money is flowing through these marketplaces, and all this sort of commerce is done digitally. And so once the money is starting flowing through this marketplace, you can start to do more with that money flow. So whether that is providing banking facilities or insurance facilities or credit facilities, the money is flowing, and this is a kind of natural evolution of that. The other is that the data is flowing in enormous volumes, and I think you've seen that these companies that typically perhaps would be very fragmented across multiple different participants in an ecosystem, they're collecting a huge amount of data. They're collecting a huge amount of data about consumers, about supply, about habits, about activity. And the data exhaust from these transactions is hugely valuable in various different ways. So you've got, this can provide superior underwriting, superior consumer experience. You've got this data flow, which is at scale is extremely valuable, which, again, company like Zillow is using at scale, both to kind of capture more economics, but also fundamentally to drive a better consumer experience. And I guess the last catalyst is around, a whole raft of enabling platforms and technologies, which kind of can be sort of plugged into services. So Plaid in the kind of providing integration in banking is an enormous example. Stripe obviously, has done this from a kind of a payments perspective and transaction perspective, but there's a whole raft of companies that are providing services to plug into existing marketplaces to provide these services. And then finally the capital is available. That one of the sort of scary things, but also exciting things is about many of these companies raising enormous amounts of money to really to transact in their own marketplace. And the capital that anyone looking at the startup ecosystem has changed dramatically over the last decade, both from from an equity perspective as also a debt perspective. So a lot of Wall Street and other large institutions are looking at this ecosystem, and they're able to, in the case of potentially real estate, since 2008, huge amounts of capital has gone into this industry, initially buying distressed properties, distressed mortgages, and done very well. And now they're looking for kind of other avenues. And so that capital is flowing in a meaningful way, which is enabling a lot of these new businesses.
So I'm kind of interested in the relationship that a customer would have with a marketplace, whether it's a B2C or B2B customer. Is it in a way displacing a banking relationship, or is this new incremental business?
Well, I think we see a general rise in like we talked earlier about kind of verticalization or platform specific services. And I think for banking services, you can start to see an increasing set of verticalized focused banking service providers. So, and this is obviously a kind of callback to the original banking infrastructures, that there were banks and financial services that were particularly targeted on farmers or firefighters or kind of other institutions. And then they've kind of, bundled and went incredibly horizontal. And I think there's a kind of evolution going back where customers and consumers are demanding a more tailored experience specifically to them. And so one would expect to see a cannibalization from the core retail banks to vertically specific or custom or segment specific banker providers, whether that's, obviously there's a kind of rise of kind of neobanks and and millennial focused banks, but also you could see this happening for, for Uber drivers, providing, Uber will get it has a sophisticated financial services component. And workers and consumers that are particularly tied to a product or service, you could see they're becoming increasingly vertically specific, and that does start to cannibalize the position of retail banks, which are, one size fits all and are unable to keep up with the specific demands of specific segments.
Do you have companies in your portfolio that are starting to go down this fintech-enabled marketplace path?
Yes, several. So, there's a number, and there's a number specifically today in real estate. So Ribbon is a company that provides almost sort of a bridge financing, enable you to buy your property before you sold your previous property, but acting as a platform, working with all agents across the US. There's another stealth international real estate company which is doing somewhat similar, again providing kind of financing along with transaction services, and then we've seen a number of it. There's another company in the B2B payment space which is providing a service, and I think we've, as venture investors, we look at some of these fintech tools per se and they think, well, that's interesting, but it may not have the defensibility of a core marketplace business, because it's an interesting fintech tool that could be easily replicated by a bigger incumbent. But what we love about these fintech-enabled marketplaces is that, one is that they have this, can often provide this magical consumer experience that takes this multi-party transaction and creates this breakthrough product experience which consumers love. It also is really complicated. Like to be a CEO of one of these companies, you need to have, this incredible left brain, which is understanding kind of how to structure, and navigate a kind of a complex financial services world, and the regulation and the structure and the terms associated with that, with an incredible kind of right brain, which is really an intuitive product sense, which is how do you build a kind of a magical user experience, which is digital, which is mobile, and that is extremely rare. And anything that's really hard is really interesting. And so finding that, that combination of product skills, business skills, and to create a breakthrough proposition creates not only an interesting tool in sort of financial services component, but also massive defensibility, which is driven by the core marketplace component. So we see, the industries that we're looking at, we think the opportunities exist both in sort of core, sort of perceived to be mature categories, whether that's housing, automotive, sort of B2B payments, as well as a whole bunch of greenfield opportunities which could be sort of seemingly niche opportunities that haven't kind of hit mainstream, or they could be, large industries. You look at, sort of recent examples in this space have been in the education space. So Lambda School has really come out with this, while it's not a new concept, has really sort of shone a light on this income share agreements, which essentially is rather than students applying to university, then applying for a loan, getting into huge amounts of debt. Lambda School is essentially taking a percentage of the future income post-graduation for the students that are admitted to its university, which removes incentive misalignment, so they can focus on really a great educational experience, and also removes the friction, uncertainty, and risk from the end consumer. So that business is taking off and doing extremely well. And education has traditionally been an industry which has been, there's enormous hundreds of billions of dollars spent on that industry, but it really has been, devoid of kind of venture scale returns. historically. And it really is this what Lambda School has really done is built a fintech-enabled marketplace, remove misaligned incentives, a great product experience, and is building up a kind of deep network effects within the business. We see that happening, in other areas of the education space, but we also see, other like the healthcare industry. Healthcare industry is also somewhat scary traditionally for venture investors. It's full of misaligned incentives. It's full of complex financial services components. And there's likely going to be some niches within that industry which are really open to smart financial services, savvy entrepreneurs that can build a fintech-enabled marketplace within those categories, and many, many other categories we think can be, this sort of notion of fintech-enabled marketplaces can be applied to.
And in the remaining time, we have time for one last question. I'm curious, when a marketplace sort of transitions into becoming a fintech-enabled marketplace, you talked about the challenge of the CEO needing to use both sides of his brain, but do they typically need to go out and recruit in financial services talent at that point? Because it's given the regulation, a lot of like sort of the technology stack, it feels like it's almost like a different business for them.
Yeah, so there's often kind of two paths for companies. So one is really a kind of deep partner strategy. So finding, in the case of companies which are looking to provide an integrated insurance product, often companies will look to partner, certainly in the initial phases of that, where they would look to really just sort of white label third-party insurance products that structured to the specific use case. And that, that's a very valid and sensible approach from a kind of starting point perspective. Or there's sort of a core in-house capability. So you see a lot of the, where companies are buying assets, whether that's cars or whether that's houses or machinery, often the structuring of the credit in that is complex, it's time consuming, and needs, it needs really credible domain experts to be on board to raise the capital on behalf of the company and structure it in an appropriate way. So we both are valid, and we often see it's easier to start by partnering, but fundamentally the CEO has to have a sense of understanding about doing this, because the rewards are significant, driven by leverage and data, but the risks are actually significant as well. So the team that can structure the right product, to build a user experience which is it provides real utility, but it's not but not it's inherently risky to the financial services partner. But to be able to navigate that with the constituents as well is not trivial as well.
Pete, thank you very much for joining us on the Tearsheet Podcast today.
My pleasure. Great to chat.